So, with prices continuing to rise, what can you do to make the money you've got go that little bit further? With me now is consumer expert Gemma Godfrey. Good to see you. What are the top tips?
Well, the most important thing is to start early, because the earlier you start, the more manageable the amount that you need to save. So, for example, if let's say you made lunch at home the night before and you saved £6 a day, so from all your family's sandwiches, for example, you save £6 a day, and I have a 4-year-old. By the time my child is 18, I will have saved over the £27,000 that you need to send them to university. So it's really making it really simple and manageable. And there's another one which is great, which is we throw away a lot of food every year. So the average family throws away £470 worth of food that they don't need.
And the price of it's going up.
And the price of it's going up, so it's only going to get more and more expensive. If you take that receipt for your weekly shop and you put it on your fridge, and every time you throw something away you cross it off, you'll end up with just a list of things you need.
Is a weekly shop from a bigger supermarket, or maybe having it delivered, is that still the most efficient way of buying the more expensive food?
What tends to happen is we tend to be charged for convenience. And quite often, going to our local convenience store, the prices, we don't tend to realise, are actually higher than if you buy it from the same supermarket, but in a bigger store.
The other thing about inflation is normally the Bank of England will adjust interest rates to combat this, but there's a problem with that at the moment.
Usually, if interest rates rise above a 2% level, that can trigger, signals that they'll potentially start to raise interest rates, which means that if you're a borrower, your mortgage payments, etc., could become more expensive. The problem here is that actually the economy is still weak. The reason why costs are rising is because our currency is so weak. So, for example, unemployment fell to a 42-year low, which is great news. But a lot of the new jobs that are being created are lower paid jobs. So we're seeing the cost of living rising, but we're not seeing our salaries really.